Hey everybody, I am Drew Russell and welcome to the Russell Recap, where I break down the numbers of what happened in Sarasota real estate in 2023, and I'm going to give you some of my predictions about 2024. So the biggest thing that probably happened in 2023, and I am sick of talking about it, but it is the thing that we have to talk about, is interest rates, right? So the cost of borrowing money to buy a home really surged from rates that we saw in the maybe 5% range to in excess of 8% at some points during the year. And so obviously any video where we're talking about rates and monetary policy is subject to change, but today is December the 13th, that's the day I'm filming this, and the Fed just signaled just a few moments ago actually that the expected guidance is that they're not going to be doing any more rate hikes, which is what everybody hoped would happen, expected would happen, and seems to be the case. And of course the markets are going wild right now because we all know that the rate hikes had put a real damper on a lot of markets, especially the housing market, and it's something that needs to be fixed. So what happened as rates started to go up to help curb inflation? We saw home prices double from, starting in 2020 to almost 2023. So a $500,000 house is now over $1 million. And the cost to borrow money for that asset went from 2% to 8% during that time. And people's wages in general were not keeping up. So we've had this kind of convergence of all these externalities come together. And now the cost to buy a house for the average home buyer is just so much more expensive in terms of the asset itself and the cost to borrow the money than it ever was. And so what you saw, especially in the back half of 2023, was a real drag on the market. You saw it go from a strong seller's market with almost no inventory to inventory across all segments of the market nearly doubling by the end of this year, which is a good thing. So I think that we are on a good path here with rates starting to come back down, and we'll talk more about that later in this video. And so as you can see with the Russell Recap, we're going to get into the numbers, the charts, etc. I've got them all laid out here in front of me. So let's go ahead and just start getting into the numbers for those of you that like to dive deep into the statistics. This first chart is almost kind of a symmetrical concave curve here. You can see this is the whole Sarasota County market dating back 4 years. So that'd be November of 2019 is when this chart starts. And the last month that was completed for data purposes was November of 23. So you can see almost a perfect curve here where we went from almost 4,500 homes available right before the pandemic to a low of less than 1,000 available units in the county by the middle of 2021. And now in 2023, we've surged in inventory, almost doubled back to the amount of homes that we had available at the start. So it is a crazy snapshot of a market cycle. What you see in the red line is these are the closed and pending sales. And what you're seeing here is a pretty steady pattern of goods selling. And I'm also seeing in this pattern our traditional start to the uptick that we should expect going into the beginning of 2024. So what really happened year over year is we had about 6% less sales in the overall Sarasota County market. But we did actually see about a 3.5% price increase across all sales categories. And we saw our inventory more than double across most categories. As we know, the National Association of Realtors says that a balanced market is something that has about 6 months of supply based on closed sales. And still, even with a doubling of inventory, we have about 4.5 months of supply across the greater Sarasota area market. So we still don't have the huge glut of inventory, maybe that some people expected. And we have a lot of sellers that are sitting on the fence for a variety of reasons that we'll talk about in a moment. What I thought would really be a neat way to kind of break down the market is, we talk about Sarasota County as a whole, but what's happening in these different micro markets? Because there's certain markets that seem to have really slowed down and are not selling as well. Days on the market is up, prices might be slipping just a little bit. And then there's other markets that are moving along, with a really good resilient amount of strength through all the changes in the economy. So I'm going to compare two different market areas for you. One is going to be Siesta Key, which is 34242 zip code, and one's going to be a non-waterfront zip code in Sarasota, which is 34232, which is kind of between, Bee Ridge and Fruitville off the water. It's going to be more of your normal family type of housing. So let's kind of dive deep and look at what happened in both of these market segments. If you look at Siesta Key, you can see that there's been a pretty clear increase in inventory, similar with the rest of the market. And you can see that sales have slowed over last year by about 10%. So we're about 10% off the pace of 2022, which is not a big surprise as some buyers are sitting on the sidelines. What I think is really interesting though, is that the average sale price for Siesta Key, which is going to be more of a luxury market, more of a market that has cash sales occurring, is actually up about 6% on the year. So when we juxtapose that with 34232, which is going to be our mainland market, we can see that they're sold and pendings, they're off about 20% on the year in terms of the speed of deals happening. And then sales prices are actually showing a slight decline of about 1% year over year. So with that, what we're seeing is the market slowing, but we're not seeing this huge pricing pullback. And in fact, in some of the more prime markets, we're still seeing things on a slight increase like we see in Siesta Key. So with all those changes in the market in 2023, and I mean really since 2019, the only constant has been change. We were really honored to be able to help over 40 families this year with their Sarasota real estate needs. And that ended up to be a little over $55 million in closed sales with a good bit more pending, I'm proud to announce. So we have tried to adapt and implement creative strategies to bring homes to market with the changing circumstances, especially with rates and borrowing costs being what they are. And we're still getting people kind of across the line with their real estate goals. So one thing that really stuck out to me recently is Zillow's latest market report, which they do a pretty deep dive, which is helpful. They came out kind of with this conclusion, and it says, I'm putting up the slide, it says that despite mortgage rates reaching 23-year highs, low inventory levels are spurring surprisingly strong competition. Depleted inventory stocks are gradually recovering, and price appreciation is slowing, but demand has remained resilient, attractive, and appropriately priced listings are moving quickly. And I mean, I could not have said it any better myself. That is what you're seeing. You're seeing a market that is slowing, but a market, especially in Sarasota and more so in some key aspects of the Sarasota market, you're seeing a market that's very resilient and strong. So that's what happened. What's going to happen next year? So what should we be looking for going into 2024? I have three main predictions that I think are going to signify 2024 coming in as a good, strong, and stable market. The first thing that the Fed helped me out with today is that they're probably going to ease their rate increases, and I would guess that as a betting man that some of the rates will actually come down into 2024, and it's really kind of not unthinkable to imagine that rates will maybe return to the low sixes or high fives by the mid or late 2024 picture, which when that happens, I think will unleash a wave of demand. If you look at this slide, you can see that across 8 different metrics that forecast 2024 home prices, the kind of average between all of them, they're saying that prices across the United States will probably increase about 1.5% in 2024. So that's actually less than CPI. That's less than what they average every year in terms of going up. So what you're seeing is a trend in 2024 of normalizing and stabilizing prices while borrowing costs come down, which is going to help the market begin to move quite a bit better again. Another thing that you're going to see in 2024 is huge buyer demand. There have been so many different families that I've talked to, buyers, whatever, for whatever reason, they're holding off. They don't feel that the market has adjusted to what they want to see yet, or really they're just not interested in borrowing 30-year money at 8%. It's just not palatable right now. So as the rates begin to come down, prices begin to level out and become steady, you're going to see all the people that have sat on the sidelines over the past 12 months or so start to enter the market, and that might create a little bit of a flurry, I think, in terms of good activity for our area. Again, it all comes down to condition of the home, especially age of the roof, and major components are big players with insurance in our market right now. But I do think as rates come down, you're really going to see quite a bit going on. And the third thing is, I think that there is a ton of pent-up seller demand. I talk to lots of people that say, you know, Drew, our house is too big, our house is too small, we want to be somewhere else, but you know, we have a mortgage at 2.4% that we locked in during the pandemic. And you know, we almost can't afford to move. And as rates come back down and the consumer kind of adjusts to a new normal, the people that have the low mortgages kind of wrap their heads around the fact that their home prices have gone up so much while they've owned, they have all this built-in equity. I think people are going to say, you know, this is what it is. This is the environment that we're going to be doing business in going forward. And gosh, you know what? We really want to make that move. You know, if you look at this slide about the top 5 reasons why sellers sold, there's tons of reasons that regardless of interest rates, people are going to keep needing to move, whether it's to be closer to family, retirement, relocation, family situation, or just not liking their neighborhoods anymore. People will only stay put for so long just based on the money, or they may be forced to move, and as rates are more tolerable, you're going to see that happening. So I saw the second half of 2023 as really a time of correction in the market, a time of slowing. And in 2024, I expect the affordability gap and that crisis to slow. And I think that you're really going to see things kind of shake loose. Another point to mention just in closing is that, you know, in our market, about 42 to 43% of sales are cash. And so people will commonly say, well, obviously the rates don't affect cash buyers. And, you know, I don't agree with that statement at all. Yes, they're not beholden to those rates, but they're very aware of the lack of competition in the market, that rates may take other buyers out, so they're going to be more aggressive. They're also happy to hang on to their cash because now they're earning quite a bit more on it than maybe they were. So, you know, the cash buyers may be more excited about being involved in the market too when they feel better about the overall long-term outlook of the market and the economy overall itself. So, you know, I hope that this information and the Russell recap has been helpful to you. I'm excited about 2024. I am happy to kiss hopefully 8% rates goodbye and leave them in the rearview mirror and move forward into a stabilizing and kind of normalizing market. Thanks so much for watching.